and gentlemen, welcome to the main event.
Let's go.
Round one, fight.
Thank you for tuning in to the Crypto Street Podcast. Here are your hosts, Killer Whale, Prince, and Crypto Dale.
And remember to tip your waitress.
What's up, everyone? Thanks for tuning in. Crypto Street Podcast. This is Crypto Dale coming to you from shitty-ass cold Iowa, as always. It's that time of year where it's winter and cold as fuck. We've got, I don't know, maybe 12 inches of snow on the ground. Prince, what do you got up in Canada?
A lot of snow, not much sun. You know, it's just Canadian winter, living the dream.
Killer, I know you're about ready to rub it in our faces.
70 and sunny. Beautiful day here in California. I had an interesting night last night. I went to dinner, and nice dinner, a couple friends, got a little too drunk. Why is it that always the Uber ride home is what triggers like some kind of sickness, you know, if you drink too much? Does anybody else find that? It's like always the car ride that just like, yeah. Anyway. So I'm recovering today, but I'm doing all right.
You didn't puke in the Uber car and have to pay the $200, did you?
Not in it, but like I barely made it out of it.
I think it's because those people drive so freaking crazy. You know, they want to try and get you from point A to point B as fast as possible.
Yeah.
That's my take, but...
Trying to get that money.
It's all right. Prince, how's everything else going?
No complaints. No complaints. How about you?
Oh, not too bad. Having some issues with the weather, that's about it, but oh well. What do you do? Nothing you can control. As you may have already read and seen, today's guest is Crypto Hustle. He is the man, quite frankly. I love your tweets. Love everything about you, really, except I don't know you in real life. So, but thanks for being on. Thanks for taking the time out of your busy schedule to sit down with us and talk some crypto.
Yeah, no problem. Thanks for having me. Look forward to this.
Good. We're glad to have you. So let's just start out. Let everyone know maybe how you got into crypto. What was it about it that was intriguing to you, and just a little bit about yourself, if you don't mind.
All right, sounds good. So before I got into crypto, I kind of dived deep down the rabbit hole of, diving into the banking system and all that kind of crap, fractional reserve banking, debt. And I always thought to myself, there's got to be a better way. There's got to be some kind of solution. And I was looking for solutions, but didn't really find anything that was quite scalable on a global level. There's people have like local community currencies and stuff like that, but that's not very scalable. Mm-hmm. Or, going back to gold or silver bullion wasn't scalable. And so I always had an interest in that sort of thing. And then I heard about Bitcoin in 2012. My friend had told me about it in 2012. I checked it out. I wasn't very tech savvy at the time, so I went to download the core wallet and didn't understand why it was taking so long to sync. I just thought I wasn't downloading properly. So I was like, I'm just going to delete this shit. And I just deleted it, forgot about it, right? And then in 2013, I remember the bubble, 2013, well, the bubble, when Bitcoin was all over the media, went to $260 or something like that. And I was kicking myself. I was like, oh man, that's that Bitcoin shit that I was trying to download. Man, $260. So I was kicking myself. I was like, okay, I got to figure out how to get into this. So I was researching it, trying to figure out how to buy some Bitcoin, and probably spent a few days doing that. And then I didn't have the perseverance, and then it just, whatever. It was kind of esoteric at the time. You either had to send money to Mt. Gox, or there wasn't a lot of infrastructure at the time to just be able to easily wire money or buy Bitcoin or whatnot. And then, so I just kind of let it be, but I was keeping my eyes on it and forgot about it again. And then obviously the 2013 bubble hit. It was all over the media again. And this time I was really kicking myself. I was like, so close. So then like every stupid noob who jumps into crypto, I dived into it head first at the top. I didn't go too super crazy on it, but a lot of people in the crypto space who start off, they FOMO into it. And I initially got burned on some pre-order schemes, mining schemes, Butterfly Labs. I got burned on that. I got burned on trying to order ASIC miner from Alpha Technologies. Never got money from that. Built my own GPU rigs. Lost a bunch of money. Expensive electricity. didn't really make ROI, and ended up bag holding some stuff like WorldCoin and whatever. So initially I thought the way to go about getting into crypto was mining. Then I realized, mining wasn't quite for me. And that's when I dived into trading. Now, fortunately, because I had the experience of getting burnt from mining, I went into trading very cautiously, and risk management was at the forefront of my trading career right off the bat. And I started off small. I didn't jump in YOLO, just start off with probably like, $1,000 or something like that, and grew it from there. 2014, a lot of it was just kind of learning the ropes, developing strategies, playing around, studying, training, learning. Then in 2015, I decided to dive into it full time, quit my job, did whatever I could to make money hustling in crypto, whether it was trading, blogging, you name it. Met my business partner, Chris Dunn, at the end of 2014. Then we built a trading school in 2016, or he had a school going, and then I jumped in on that. And we've been running that ever since. And then it's been great. I mean, it's been lots of, all the experience have been great, the good, the bad, and everything's a learning lesson and helped me get to where I am today. And if it weren't for that stubborn persistence, there's a fine line between stubborn and stupid. Initially, my stubbornness was stupidity, but after some perseverance, I've developed trading systems and strategies and stuff that have worked consistently for me. And obviously, like 2017 was just absolutely amazing all around as far as everything's concerned in crypto.
Yeah. I love that you're so open and honest about, some of the setbacks you had when you first got in.
Yeah.
Because I think there's some newer folks who maybe got in near the top at 20K who are probably going through a similar thing right now. And I think, it just goes to show like you were kind of like forged in the fires here, and, you've kept at it, and, now, you're crushing it in your own right. And so I think, just for the newer folks who are maybe getting beat up a bit by the market, just stick with it. Just keep trucking along, persevere.
Absolutely. I tell people, and something I often tell my students, because we get a lot of new people jumping into crypto and they need guidance and such. And I tell them, I say, your number one goal right now is survival. Okay, forget about trying to get rich right now. Just survive. Get to know yourself as a trader. Test out a strategy that works for you. There's multiple different trading strategies that one could execute. Find one that's suitable to your personality. Test it out. Make sure that you make consistent gains, and then slowly crank up the thermostat. Start increasing at your risk capital as you gain success. Your risk tolerance goes up. But a lot of people, they dive into it. They see all these people making millions of dollars. They think to themselves, all right, well, I'm just going to dive into it. I'm going to mortgage the house and put it into crypto, and I'm just going to flip it and 10x it, and then Lambo time, right?
Yeah, retirement.
And then they get wrecked. They don't know themselves as a trader. They don't have self-control, understanding their emotions, and how to be a contrarian. That's not something that comes naturally. You have to really work at kind of doing the opposite of the herd. And that takes training. And it's like someone trying to bench like 500 pounds right off the bat. They're going to kill themselves.
Yeah.
And we see that often, time and time again. Now, if anybody's listening to this show, and if you did get wrecked and by the top and made all the same mistakes that many of us have made, learn from it. Try to get as much value as you can from it. Be more cautious, manage risk, and try to survive. And if you can survive in this space long enough, then chances are you will make it.
Can you elaborate a little on your trading style? Like, what are you momentum, swing? Like, what have you found works best for you and suits your personality best?
Well, I find I love dip buying and bounce plays. That's like my number one trading niche. But I execute a variety of different styles. So there's bounce plays, sometimes momentum breakout plays. If you've got a nice solid breakout, there's volume, it's moving in a direction. Sometimes you can just kind of pay a little extra for that confirmation. The reason why I like bounce plays is I find they tend to be very predictable. You know, you're playing with counterforce. You take a rubber ball, you slam it into the concrete, shit's going to bounce, right? It's not a matter of, usually if you get a really degenerate dump, it's not a matter of if it's going to bounce, it's a matter of when. Unless it's one of those really slow grinds. It's like in a bear channel that just kind of slowly grinds into capitulation. Then you tend to have to stay away from it. I don't mind accumulation plays. Those can be good. They often require some patience and perseverance. You might end up buying something or accumulating something. You might have a little bit of a temporary paper drawdown because oftentimes if you're accumulating something new, it's not very liquid. And scalping. Sometimes like I'll scalp Bitcoin when the markets are dumping. It's the only time I scalp. It's just because there's a lot of intraday volatility when the markets are dumping. Other than that, I find the markets can be a little bit too slow for scalping. And I only like scalping liquid markets. Same with dip buying. Like if I'm going to dip buy something, it's got to be liquid. It's usually like the higher cap coins. Because if you try to hunt for bounce plays, I find if you try to hunt for bounce plays in less liquid markets like mid cap or micro cap markets, they can just get stuck at the bottom without bouncing very, very heavily. Usually the more volume you put into something, the higher probability you're gonna hit counterforce and momentum.
So you talk about like playing some of these bounces and getting these scalps in when it's highly volatile. What's your approach towards the whole leverage game within crypto? Because it seems to be a very popular one. I don't agree with the amount of leverage some people will be using, but what's your take on it?
Well, my take is if you're new to trading, stay the hell away from leverage. It's the number one thing I see people get burned on. For the most part, I'll use leverage either if I'm shorting, and if I'm shorting, and let's say I'm shorting an altcoin, it has to be a liquid market. I'm actually quite cautious with leverage. Maybe I'll go like 1 or 2x. I need wiggle room. You need to allow the market room to breathe. I've seen people doing 100x and maybe they might post something or brag about it on Twitter. But for that 100x trade that they pulled off, I asked myself, how many times did they get liquidated before they got to post that, right? Because you've only really got a 1% move for the market to move against you. And that's not a lot of wiggle room, right? Sometimes you need to let the market breathe and fluctuate a little bit before you hit your targets. So usually for shorting, if I'm doing bounce plays on dips, I'm usually just playing the spot market. So it's just very simple, buy low, sell high. When the prices are up in the sky, up in the clouds, and everyone's smoking hopium and euphoric, that's usually when I like to hedge and be a little more cautious. And then when everything's just falling apart and all is lost and everyone's pouring sand on their heads, that's usually when I'll start buying dips. And I'll do like an averaging down approach on the liquid market, like the last Bitcoin dip. I caught a nice dip around the 6,000 mark. Sometimes you got to play around with it too. Your first stab at it might not be the one, right? So you got to kind of position size into it, not just go all in on the first dip. Like I initially took a stab at around 8,000 and got stopped out on a portion of that. The other portion ended up getting rolled over on, got a much bigger fill at around the 6,000 area. And one little simple trick that I do is if you start dip buying on Bitcoin and then you get rolled over, you can flip it into an altcoin that's going to bounce a higher percentage probability to get out of your shittier higher entry. You'll end up getting out of that one really fast, either a small profit or a break even, and then let the lower orders at a good cost basis ride. So sometimes there's a little bit of creative risk management there, but
that's the thing I agree with. You almost got to be willing to scale in when you're looking to get in those dip plays, because even myself, if you go in it too big all at once, you're probably just going to have something happen where you get shaken out because it's so volatile anyways. Just scale in slowly and
absolutely. Yeah, position for when I'm dip buying, usually position sizing's my preferred form of risk management. And then the lower the price goes, the heavier my orders get, and so that's basically how how I do it. And I was, in this last dump, I just had a very simple rule for myself. Aside from the first shakeout we had from 20K to 10K, because that was like a 46% drop. After that, I told myself, I'm not buying any dips above 10K. This is ridiculous. I asked myself the question, what are the odds that Bitcoin will never drop to 4 digits again, right? And I thought the odds were pretty close to zero that would, like a very high probability. You're in 5 digits. That's new uncharted territory. That's like euphoria zone. Everyone's celebrating that area. 5-digit Bitcoin is a milestone. And usually those new milestones, when they're conquered, they don't last very long. You need to, you can end up going back into those zones, but it takes time to really get acquainted with those price areas and to stabilize.
I think, that's an awesome point to bring up too, because even if we look back, to those Mt. Gox days where it had that huge run up, it got into that 4-digit Bitcoin, and then that didn't last very long. And then it did a full retreat pretty much, and it just kind of consolidated until it was finally able to bust through that 4-digit Bitcoin and get into those 5. So that's a good, I like that point that you bring up there. It's really good.
Yeah, absolutely.
When you're buying dips, is that just kind of a feeling thing in terms of when you actually pull the trigger and make that first trade after a big downturn? Or is there a specific chart or, a certain metric that you look at? Or is it really just kind of a gut thing that you've acquired over, years of being involved in crypto?
I would say it's like a combination approach. So obviously the first thing I look at are the technicals. That's kind of like my roadmap. So I'll look at prior areas of structural support resistance. Oftentimes we'll get areas where prior resistance turns support. In the healthy bull trend, all the major dips kind of fell into prior resistance turns support. And, they had kind of healthy corrections. I would say, 38% was the largest drop that we had in 2017 as far as corrections. When we went from 20,000 down to 10 and we had a 46% drop, I knew at that point we were starting to move into, once we went vertical parabolic, I knew we were moving into bear territory. But once we had that anomaly of a 46% drop that deviated from the typical 38, I knew something was up, and that to batten down the hatches and prepare for a shitstorm, because you got to look for little anomalies like that. So I look at structural support areas. Sometimes I like to use Fibonacci. So, 61.8 or 78% retracement zones sometimes are good areas for dip buys. And also, I'll count the amount of days it's been bleeding out. And I look at the size of the candle, the size of the 1D candle, right? I usually, when I'm looking at major dip buys, I live on the 1D charts. I like to look at the bigger picture and not get caught up in the noise of the minutia. And then sometimes if I want to time entries, I might, zoom into the lower time frames. But for the most part, I'll just find structural areas and I'll stack a bunch of various different orders and just kind of wait for the market to come to me. Although sometimes the hardest part in that is being patient and waiting for the market to bleed out properly before you start jumping into dip, because my instinct is just wanting to jump into the fire right off the bat, right? So sometimes if you jump in a little bit early at prior support, like around the 8,000 mark, you have to have a plan, risk management plan. And I think this is where a lot of traders go wrong, is they go into a trade, but they don't look at the worst case scenario. They don't say to themselves, what would happen?
Best case scenario.
Yeah, exactly. What would happen if this were to fall apart? How would I deal with that? And if you can plan and map that out ahead of time, then if you're in that situation, you'll be able to think clearly and not be emotional. Or if you do feel emotions, you'll be able to override them through your plan and through the logic of the trade.
Yeah, I think it kind of brings up an interesting point too that I've been thinking about lately, where there's this kind of notion, I think, especially if you're new to trading or investments or anything like that, that you can call the exact bottom or the exact top. It's so hard to do. And so I think if you can make your living kind of in like the fringes, the 20% above the bottom and like 20% below the top, that's where you can really do well. And I have people asking me all the time, with this big dip in crypto, should I buy now? Is it a good time to buy? Is it going to go lower? And my answer to them is like turned into the same thing every time. It's like, look, it definitely could go lower. I don't know. But for a fact, we do know that it's 60 to 70% cheaper than it was 2 weeks ago. So if you believe in this stuff long term, which I do, which I think everyone here does, and most people listening to this do, then it's still a gigantic discount, and it's not even a dip. I mean, damn, 60 to 70%. I mean, that's a gigantic fire sale, basically.
Yeah, absolutely, totally agree with you. And one of my biggest pet peeves in trading is when traders speak in absolutes about the markets, like, "Oh, the market will do this," or like that.
Me too. I hate that.
Just like they absolutely know through their crystal ball exactly what's going to happen. And I find
it's salesmanship.
Yeah, and I find a much better approach is to just look at both sides of the market, understand market behavior and what to look for on the bull scenario and also on the bear scenario, plan for both sides, and think in possibilities and probabilities, and also identify what it is that we do know and what it is that we don't know, right? And I find that approach tends to be approach that's more geared towards survival, because the markets are kind of ironic too. If you claim to know anything or you claim anything in absolutes, it's almost like you really got to knock on wood, because the markets will they'll punish you, right? They have a way of humbling hubris. And and to your point of what you said, nailing exact bottoms and exact tops, and it's absolutely great when that happens. I generally say, aim for perfection, but settle for profit. And I know that with a lot of the crypto traders and stuff, we kind of have fun sometimes trolling and having dick swinging competitions. Who's got the the best entry and the best exit, and at the end of the day, all that matters is that you're making profit, right? And only in crypto could you sell on a 10x and be salty because it went up 100x. I mean, this has happened to all of us before, right?
Prince and I were talking about that with Tezos. It's like there's so much negativity around Tezos, and everyone's like sick of all the drama and BS around the foundation. But if you look at it, I mean, the futures are still 10 times higher than the ICO in what, like 6 months, 7 months? I mean, it's a 10 times in a half a year. So it's like, it's not all bad, It's not the end of the world.
Yeah, absolutely. Tezos is like right now, Tezos is percolating in a cesspool of shit and FUD, which is like, I think it's just making it's turning carbon into diamonds when it does release and hit the markets. If, obviously there's no guarantee, but if, I think there's still a good probability. I think it's going to end up being a beast.
Yeah, I'm with you on that one.
We don't need to be getting killer on the whole Tezos kick this episode.
I'm getting upset.
Hey, Hassel, what do you think of the current state of the market? I mean, that's a big question that I get a lot on Twitter or Telegram too, is are we in a bear market? When is alt season, et cetera, et cetera? Maybe just give your take on where we're headed. And, you don't have to be specific.
Well, in my opinion, just on a technical level, we are in a bear trend. I mean, a 70% drop from the top. The last time we've seen that was 2014. Now, the ultimate question is this like a summer of 2013 bear trend, or is it a winter of 2014 bear trend, right? Is it going to be a smaller bear trend, faster capitulation, consolidation, and then break out into new highs after a period of, let's say, 6 months? Or is this something that's going to grind down over the next couple of years? On a fundamental level, I think that things are overall bullish. I'm obviously a long-term bull on crypto. As it looks right now, I mean, I think we're due for a nice bounce play. We'll probably get a nice dead cat bounce that might creep its head up to, anywhere from $11,000 to $14,000, and then probably roll over, get a slow grind, capitulation, and then possibly an accumulation period. But if you ask me in relation to altcoins, I think pretty much all the altcoins are overpriced. You just look at the prices from a year ago, and they're all inflated. A lot of the prices have been inflated as a result of the higher Bitcoin prices. That's why I was very adamant about only trading in USD. $10,000 plus for Bitcoin. All my trades are in USD. If I made a gain on altcoins, even if they didn't have a USD or USDT market, I would immediately lock my gains in Bitcoin and then hedge it into dollars. Because at that moment, I realized that once Bitcoin breaks down and has a significant drop, there's not going to be a bloody altcoin out there that's going to hold up any of its USD value. And what we've seen in the past is literally like a 90% plus drawdown fiat values on everything across the board in 2014. And, I've experienced this with Litecoin. I remember jumping into Litecoin when it was $50 in 2014. Oh, it's like the next Bitcoin. Look how cheap it is. It's only $50. Bitcoin's $1,200 or whatever. And then started averaging down. Okay, it's $30. Oh, look how cheap. I'm going to buy the dip. $15. Look how cheap it is. $5. I can't believe it's not butter. And then it went down to 80 cents, right? 80 friggin' cents, and then grinded it for 2 years in accumulation, right? So it's just, you get experiences like that, and you when you know you're in bubble territory, you start to think about the fiat, the USD. So in bear trends, I'm a fiat maximalist. And I'm only doing this because I'm greedy and I want more crypto in accumulation. I'm only doing this because if I have more dollars in my trading account, when we do get in a period of accumulation, like once the bear trend's over and we go into the spring season of accumulation and the next bull season, I'll be able to buy all my favorite shit coins at bottom barrel prices and I'll have more ammo to do it with. So that's my reasoning. And I like to try to think of it as like greater cycles. Now, ultimately, I could be full of shit and I could be wrong, but so far it's been working out fairly well.
I like that you bring up, tracking it in the US dollar value, because that seems to have been quite the topic for crypto Twitter, especially when we were in that crazy bull stage. Everybody's like, oh, I'm not watching my US dollar. I'm only watching Bitcoin value. That's all I want. I just want more Bitcoin. But then it's funny to see the reaction, because once US dollar starts dropping, oh, well, now they're watching their US dollar. They're not just watching their Bitcoin balance.
Yeah. I know. Right. That's like one of the funnier things in like crypto Twitter is this like this like obsession, I would say, with like, if you're not getting more Bitcoin value, then you're not making any money. I'm like, you're still making money. Like, you're still making a lot of money a lot of times, and I guess, it's the notion that you could have made more by just holding Bitcoin, which I get, but I just think it's a little bit ridiculous, because you're making so much money, but some people act like you're just completely failing if you're not like increasing your Bitcoin value. And trust me, I love crypto. I believe in it long term, but I mean, the US dollar is still the US dollar. It's, basically the world's reserve currency for a reason. And so as long as I can keep making more of that, I'll be happy.
Absolutely. Like in 2015, during the accumulation period and during the healthy bull trend of 2016, I didn't give a shit about fiat. I was only trading for Bitcoin because in my mind, I knew that eventually it wasn't a matter of if, it was a matter of when Bitcoin would not only test the all-time highs, but probably break it into a new cycle. So for me, I was like, all right, well, I'm going to trade to get more Bitcoin. Once I started breaking it and going parabolic, I thought to myself, okay, now that I've made a bunch of money, wealth preservation, preserving my capital is more important to me now. Now I have to keep this profit that I made, right? And I think in relation to what you're saying, as far as like the altcoin to Bitcoin ratio, I basically, it's like with that, I know a lot of altcoins, they topped out last summer. They had really strong bull runs. They topped out. And then there was a huge, let's say 70 or 80% drawdown against Bitcoin. A lot of them went up in USD value as a result of Bitcoin going up, but lost against Bitcoin. So in a play like that, there is a thing which is opportunity cost, right? Whereas one would have made more money had they rode Bitcoin. So in that sense, the better play would have been to sell all the parabolic altcoin markets into Bitcoin, ride Bitcoin, and so on and so forth. But it's a constant like shuffling act. And obviously people are always going to own some altcoins, I would assume. Yeah. It's just a matter of like how much risk and what percentage does one want to balance one's portfolio and Bitcoin, altcoins, or fiat dollars, And it's always just trying to like assess where the market's at in its cycle and to assess like what the best ratio is before the next move, trying to think a couple steps ahead. But yeah, for sure. Absolutely. And even in relation to that argument, it's one thing I'm acutely aware of right now is the tax situation, especially, in Canada, tax can go up to like 53%, right? Yeah. So naturally, like the accounting and stuff, they only care about the dollar. So, if I 10x, if I trade some shitcoin and I 10x it in Bitcoin, but then Bitcoin loses 70% of its value, I'm absolutely screwed from an accounting perspective. You know, I might come out of that not even having any profit and actually might even turn into a loss, even though initially it looked like a profit. So
that's a good point. Yeah. Let's bring up this whole BitGrail situation here. So BitGrail, for those that don't know, announced that they are insolvent on the 9th, I do believe it was, on their website, saying that they had approximately 17 million XRB, or now known as Nano, pretty much stolen, disappeared from their wallets. This value, it's about 150, 160 million dollars US dollars worth of coins disappeared. It's crazy because, this is crypto, and it's funny because this almost seemed like it was just another event in crypto, but I know a lot of people who are pretty affected by this. If you got a message, I guess, for those maybe who are affected by it, those who weren't, but they're new to the game and they don't really know what to expect still, and maybe they're just kind of eyes are wide open, like, whoa, like this is kind of a crazy place. What do you got to say, I guess, if you had some words of wisdom for?
Well, it's yeah, no, absolutely. Like, counterparty risk is certainly something to take into consideration, especially for traders. So unlike other traders in other markets, like the stock market or whatnot, this is something that we need to factor into our risk management strategy. So one way to mitigate counterparty risk is for your, to have separate buckets. Like for any longer term holdings, obviously keep it offline in your own wallet, hardware wallet, and just hold that for the long term, whether it's long term Bitcoin or altcoins or whatnot. As far as trading capital go, that approach, they say, oh, don't keep any money on exchange. Well, if you're an active trader, you have to keep money on an exchange, right? That's the nature of the beast. And there's also, you got to weigh out the pros and cons for one or the other, because you could keep it all offline, but if you have a 70% drawdown, you might not be able to get your coins over the exchange fast enough to be able to hedge. What do you do in a bear season, right? You keep it all offline and you just bleed out all your profits dry and waste a perfectly good bubble. No, you got to keep money on exchanges. You got to hedge into fiat, into dollars. So the way to manage risk around that is, I would say, pick like 5 or 6 exchanges and spread your trading capital amongst those 5 or 6. So if one exchange gets hacked or it pulls an exit scam, your trading capital is not wiped out, right? It would suck.
Yeah, I would second that.
It would suck, but it's not wiped out. And and then if a portion of it is wiped out, then you could use that as a tax write-off against your other profit on the other exchanges. So that's what I do. And there's another benefit to that as well. Sometimes some exchanges like GDAX or whatnot hit the circuit breakers. Market's dumping. Oh, we're halting the exchange, or maybe they get a DDoS attack. So you might not even be able to actively trade. Your money might be accessible, but if you don't have it spread out on multiple exchanges, you won't be able to trade. Another benefit to that is if you're hedged in dollars on multiple exchanges, you can go shopping. When the markets dump, you often get these arbitrage opportunities where you'll see the price much cheaper on one exchange than another. So for example, I managed to actually scoop up a bunch of Bitcoin at around $5,800 mark over on an exchange, Quadriga CX, because on the Canadian price, it was a lot cheaper. And I just so happened to have a bunch of dollars sitting there as well, right?
That up.
So
it was beautiful.
Yeah. And I think it even went lower than that. I think it went as low as like 5,400 or something like that. I didn't get those really low fills, but I was able to get it a few $100s below the rest of the markets. And that's another great way to manage risk too. If your spot basis is a lot lower than the rest of the markets, then you have a little bit more wiggle room in buying dips as well.
It's a funny thing you bring up Quadriga doing that, because I've been noticing Quadriga seems to enjoy trading at a bit of a discount when things start to get hot in the market. So I don't know. I think that's just for the Canadians. We got a nice little lucky situation with that there.
Yeah, absolutely. Nice discounts there.
Oh, yeah.
Did anybody else see this headline?
Never know.
By the way, Russian scientists arrested for crypto mining at nuclear lab.
Really?
That's a hell of a headline. Yeah, I guess they were using like one of the super powerful computers there to mine crypto, which is interesting.
Well, I think we're just going to see that happen more and more. I think we've already seen some stuff like that happening. Wasn't there an individual at Goldman who was mining off of some of the servers or whatever they had?
Fired,
I think that's going to be a more common thing we're going to see coming out into the press. It's like, oh, another person got busted for mining Bitcoin at work.
Crypto is just infiltrating every aspect of society right now, you know?
Oh, it is.
Yeah, it is.
Which is good. I mean, this is the thing. I think that ultimately it might actually just turn into a backbone of our society, like the price of oil or gold, right? Especially now that we have more institutional investors, CME futures, all that kind of stuff that's happening right now. Once they have large positions, once you have more hedge funds and so on and so forth, it'll kind of be in a situation where they couldn't even shut it down if they wanted to, because it would completely disrupt the economy. I think eventually we'll end up going in that direction. And I mean, people say, oh, well, you can't kill crypto, you can't kill Bitcoin or so on and so forth. And it's true, you can't stop peer-to-peer nodes. Just like you can't stop BitTorrents, you can't stop people from downloading pirated movies or whatnot. But they could bottleneck it and say, hey, you know what? We're not going to provide banking services to you, and you can't use your Bitcoin to buy anything. I mean, that would certainly be a damper on it. So,
well, and even to touch on that echo where, it's like it could really hurt the economy and, the financial situation. We saw South Korea come out when there was kind of that FUD that, oh, they're going to ban Bitcoin or something, just not long ago. And then, their leader came out and says, that this is a lie, that's not the case. And he said something along the lines where, there's too much running now for them. There's a lot of growth opportunities within their economy that they see coming from crypto. It's already happening from crypto. And he straight up said, why would they want to hurt that? This is going to be a great area for them and, their economy to grow into. So, that was one thing is like, we have no intention on harming that because we want to grow as a nation. So, it's funny just to echo on that. It's already starting to happen slowly.
Yeah, absolutely. It's like the internet started off as some fringe technology communication networks between, cypherpunks and nerds or whatnot. And next thing you know, it's the backbone of our society. If we didn't have the internet today, everything would probably collapse right now.
Yeah. Oh, yeah. Well, back then when the internet was new, people were saying, what do we need the internet for? They're doing the same thing that they're doing now with crypto. Well, what do we need Bitcoin for?
Or whatever.
Yeah,
what are we going to use it for?
And then when the email came out, everyone was saying the same thing too. Well, what the hell do we need email for? We have a post office. Hustle, what would you give if someone new entering this space right now? What one piece of advice would you give them?
The piece of advice I would give them is be patient. Like I said before, learn who you are as a trader. Start off with small amounts of money. And if you're looking to be an investor and not a trader, wait till the market's going in an accumulation zone. Wait till everything's cheap again. And then buy everything. Wait till a lot of the new money gets ejected out of the markets. Because usually what happens is, oftentimes like when we went up above 10,000 plus, we often heard this time is different. But look at all the new money coming in. We're going to the mainstream. This time is different. Well, the thing is like most of that money is new speculative money and speculation outpacing utility. Not a lot of people are jumping into crypto because they actually want to use the apps or the blockchains or they have like a real world use for it. Some people do, but a lot of people just jump into it. They don't even know what they're doing. They just jump into it blindly just to make money. And a lot of that money gets shaken out and some of that money never returns. If someone bought Bitcoin at 20,000 and panic sold at 6, those people aren't coming back. It's probably over for them, right? And so as fast as that new money comes in, a lot of it gets shaken out. And I think that's why in 2015, the markets were so dead. That it was the least amount of volatility we've seen. It was absolute shit for traders. A lot of crypto traders were trading Forex at the time, seeking action elsewhere. But it was the absolute best time for investing, right? That was the point of max opportunity for buying your favorite altcoins or Bitcoin or whatever. So I'd say, if you're in a bear market or a bull market, especially in a bear market with the volatility, excellent time for trading, right? That's like a trader's paradise. Accumulation, not so hot for trading, but absolutely amazing for investing and for hodlers, for people to just buy and hold. And so if people are looking into investing in a buy and hold approach, buy as low as you can. That should be your number one rule. If you're going out shopping for something and you can get a 50% discount on one store for the exact same product, why go spend more somewhere else, right? And that's the twisted thing with the markets and market psychology is like people associate a high price with value, right? They didn't give a shit about Bitcoin at $200, but at $20,000, suddenly grandma's calling up wanting to buy some Bitcoin because it's almost like revenge investing. They missed the boat. They trolled it. They thought it was dumb. They missed a boat. They saw that they could have made 10,000% gains or whatever it was, that a fortune just passed them by. And so finally they say, fuck it, I'm going all in. Sick of this shit. Everyone's getting rich but me. And then they just dive in and that's the top, right? Like, so
that's
survive.
That's literally the best quote there too. Everybody's getting rich except for me.
Totally.
Yeah, absolutely. So survive and then accumulate when it's
so
all
true.
cheap and then hold. So that's what I'd say. Just be patient. Wait for the best opportunities. And there's a time for cost averaging down too. Obviously, the time to cost average down might not be when the prices are high in the sky either.
Before we move on to this new segment we're going to do, I want to say to everyone listening how, even for guys like all of us, that have been in the game for a while or whatever, patience is still extremely hard for me to come by. If I see, like in the pod, if someone's saying, something's about ready to take off, it is still very hard for me not to just
crypto's
jump
tough, right?
in. And I'm a lot better. I'm a hell of a lot better than I was, but it is still really hard. So it's something you need to continually work on, and you need to try and perfect as your patience. And
crypto's tough because we are this past year and a bit we've gotten very, I'll say, spoiled. We get very nice moves very quickly. We can get very large trends very quickly, right? So I think we've gotten spoiled. We don't have to be, we haven't had to be patient really in this market for a while to make some killer gains, right? Whereas, maybe to get these kind of gains, you got to be holding on for years and years. We don't need to do that. So we've gotten spoiled. And I think, we're probably going to go through a phase here it's going to make people learn how to be patient again.
Yeah, absolutely. Absolutely. And a lot of people don't like looking at the bear scenarios, right?
Mm-hmm.
We often see like a perma bullishness market sentiment. Yeah. And I mean, for good reason. We've been on a really strong multi-year bull trend. So it's easy to kind of get caught up in that sense of permanence, right? But I would just say that people always just have to look at both sides and identify what it is that we don't know, and that we're just dealing with possibilities and probabilities, and that nothing is guaranteed. The market doesn't know a shit. Nothing is guaranteed, and so that's another thing too. I would say is to not just look at things that suit our bias, but to be a little bit more neutral and equanimous and also comfortable with both possibilities and have a way to profit regardless of whether the markets go up or down.
So the other day we get, I guess we should say this, address the thing before we do. We get with a lot of followers, you get a lot of maybe stupid DMs or what am I looking for? Stupid replies when you post anything. So we like to share those in the pod a lot with, just everyone in there, get some laughs out of it. So one day Cryptoker was like, you guys need to make a new segment on the podcast where you read, a couple stupid tweets, kind of like Jimmy Fallon, I think it is, that does the mean tweets with celebrities. Not saying we're celebrities or anything, but we get a lot of funny things. Yeah. No, because I tried to pull the Crypto Dale card the other night when I was went out to eat with my wife, and they're like, "Sorry, it'll be a 30-minute wait." And I'm like, but "I'm Crypto Dale."
Do you know who I am?
No, I didn't really do that. That'd be so super douchey. But so we're gonna each read. I've got three that are pretty funny. But I don't know anyone want to lead this off where we're doing that. I don't know what to call the segment.
Mine's a
funny tweet.
Mine's a tad bit mean. We're kind of making fun of a gentleman here, or I am, not we. I won't drag you guys into it. Just spread the blame around. Anyway, I get a DM. Hello, sir. All my BTC was hake. If I am create a YouTube video, but private key was show in video, and all my 1.5 BTC was hake. So please, sir, donate some BTC to address.
He put his private key in the YouTube video?
Sorry, buddy. I guess, yeah, he had his private key like in the background somewhere in his room. And somebody jacked it from a YouTube.
Oh, man.
Here's one I got that kind of could piggyback to that. Dale, I sent you a 1 BC. I was super stoned. Please send it back.
Did you get it?
No, I didn't. I didn't get any freaking BC, whatever the hell. I don't know. I sent you 1 BC. I was stoned. Another funny one I got, and he sent a longer message, but this is how he started it. Hey, I really like your shoe.
Some of the spelling is great.
The spelling is horrendous.
Hake.
And we got some guy too that was chirping. This I'm stealing Prince's because he was going to do it, but he DM'd me. So essentially, Prince, you're stealing from me. But this guy kept chirping at the podcast. I don't. What was he saying?
He was calling us trash, telling us we're a bunch of idiots and morons. But what was it?
And then after publicly shaming us, he DMs me. If you have the money, I have the skills. What do you want done correctly?
It's like, oh man, you know how to try to sell
yourself. I remember this guy.
See, you guys,
yeah,
create
and
that.
To this day, he's still chirping.
Oh yeah. He's on like YouTube video comments too. You know, like
yeah.
He's like, there goes Crypto Street again, jerking each other off.
He's just he's trying to create a problem for you guys and then sell you the solution.
Yeah,
exactly.
Yeah, exactly. My last one I have is on January 5th. Some guy said, "Daddy ICO, yes or no?" And I don't reply to any messages that or people are asking for advice or anything. And then January 20th, so 15 days later, he replied, "Yes."
He's all in.
He answered.
Doesn't even need that.
You should have listened, Dale.
Yeah, you don't need me, man. If you can answer your own questions, you don't need.
See, I don't get the really funny stuff like you guys do. I just have people telling me I suck. Or just telling me I'm dumb. They're like, you're stupid. Stop talking about the weather.
I have my DMs closed.
You know?
Don't let it get to you, Prince.
Oh, yeah. I don't let people DM me. I don't want to look through that noise. My emails, I probably get 5 ICO pitches a day. And I don't even open them.
Oh, I'm sure.
Yeah, you can't. It's just too much.
You have a lot more followers than we do, too, so I can't even imagine.
Yeah, you've got more followers than all three of us put together, so... Yeah, I try and honestly answer all DMs I get if they're legit asking a question or, you know, where they can go to learn. But if they're asked, when I get ones, what do you think of this? When are you selling this? You know, shit like that. I don't take
absolutely.
the time. Do your own fucking research.
Absolutely.
So Hustle, you got anything else you want to add to this? You want to pitch your
trading school there,
class that you run and your website?
Oh, sure. Okay. So, cryptohustle.com is my website. Haven't really put a lot of energy into it this year. I've been too busy trading. So, need to start working on that again. And, we run our courses over at skillincubator.com. And that's that. You know, usually I share my trades with people, but oftentimes I just teach people some strategies and then tell them to kind of think for themselves, you know, and to make their own trading decisions and have their own plan and instead of just trying to give fish or whatnot, right? And expect everyone to be responsible for their own trades and trade management and all that kind of stuff. So we want to train warriors and not like an army of plebes, bunch of sheep, right? So
Yeah, give a guy a fish and he can
Not
eat
cheap.
for one meal. Teach him to fish and he can eat for the rest of his life, right?
Yeah, exactly. So, and we obviously do charge because there's it's kind of like a gateway, right? It's for
and it's time consuming too on your part, right?
You need to get paid for your
know,
time.
Yeah,
Totally agree.
absolutely. It's one thing, and it adds another degree of pressure as well, because it's one thing making your own trades. It's another thing managing a trading community at the same time of your own trades. So there's just this other element of time consumption and such. But so far, most of the people who are with us are fairly happy, and we've started doing these gatherings too. We had our second one in Austin, Texas, with about 30 people, and it's great. It's actually great kind of meeting other crypto traders and stuff in person and such. But I generally don't really shill the school that much or anything like that. I figure, if people are interested, they'll find me.
Well, I know we all want to thank you for taking the time out of your schedule, joining us. It was a great episode. I'm sure people will respond well to it.
Absolutely. Thanks for having me. You guys are running an awesome show, and it's great because it's nice to kind of listen to all these other crypto traders and hear their stories and get a pulse for their types of strategies and what they're into and their journey. So it's nice to have a voice to some of the other traders out there and kind of get a vibe of who they are and stuff like that. So
before we leave, I need everyone's attention. That's listening. All ears on deck. Tip your waitress. Oh God. Okay. I went out last night, had some sushi.
There it is.
And our waitress was awesome. So that makes your dining experience that much better. Am I right, guys, or am I right?
Huge fan of waitresses.
Awesome.
Dale is.
Absolutely.
All right. Well, thanks everyone for listening. Thanks again, Hustle. You two knotheads. We'll talk to you two later. Everyone take care. Peace out.
All right. Cheers. Peace.